The Bank of Thailand has stood pat for a very long time. Is it inevitable that it raises rates come August?
Well, good morning. Actually, the thinking of monetary policy hasn't changed much since the beginning of the year. The main pressure point is actually the rise in inflation, as you've mentioned. But in the bigger scheme of things, the recovery is just beginning in Thailand because we are lagging behind other countries given our heavy dependence on tourism. So the first priority is to make sure that the recovery takes hold and then gradually renormalize monetary policy.
But recovery is already taking hold. We have tourism now getting a boost from the reopening of the border. How much room do you have to raise rates? How much room do you have to normalize rates?
I mean, we're at historical lows of our policy setting, so we do have, some room to go in terms of going back towards neutral. But in terms of the recovery, it's begun. You're correct, but look at tourist numbers. Actually, this year we're forecasting around 5-6 million, compared to a figure of 40 million that we had pre-COVID. So it's still quite a long way away. GDP for this year, it's going to around 3.3% and picking up to 4% next year. So the recovery, I think, is going to gain full steam in the fourth quarter of this year. So at this stage, we are still in the early phases of the recovery in that sense.
Disyatat, what's more important for you to be dealing with through monetary policy, the weakness of the baht, or is it this inflation problem that everybody's facing?
Well, the main thing, as I said, is making sure that the recovery that is beginning actually gains traction, but also at the same time making sure that it doesn't add to the inflationary pressure, which is quite high right now. In terms of the inflation story, it's clearly a supply-side driven pickup in prices, mostly external. We do project it to come down next year from a figure from 6.2 this year to around 2.5% next year within our range. So in terms of the broad scheme of things, we want to actually make sure that the recovery is on a strong foothold and that doesn't add to inflation pressure. The currency weakening is something that most emerging markets is going through because the dollar has gained quite a bit of strength. So far, it hasn't become disorderly in that sense, and we are looking at it just to make sure it doesn't add undue pressure on inflation as well.
Okay, well, with that in mind, Disyatat, you don't want to really in any way kind of hurt the economic recovery and wait for that to gather some steam. But I mean, the minutes from your previous meeting in June from the MPC suggested that by delaying, you could actually cause quite a lot of damage. And indeed, inflation pressures may cause greater cost to the Thai economy. That was the conclusion of that meeting. So what you're saying doesn't really fit very well with those minutes.
No, it's a delicate trade-off, right? If we move too early and too much, think of, we're about to take off. You need to reach, takeoff velocity. You don't want to slow down the plane too much before you reach that. But then once you're increasing altitude, you don't want to go too fast. That's going to be next year. So the trade-off between moving too early and too late is just to get it right. It's a narrow road that we're trying to steer. But in the broad picture, looking at this 2-year horizon, we do project inflation will come down. And most of that is a mechanical a result of the supply shock not being long-lasting or getting new shocks in the next year. We do want to make sure that inflation doesn't become embedded in the system. That's the first and foremost concern. But the way we look at it now, the pressure should ease quite a bit next year, and so that's how we view the picture right now.
You talked about how yen baht weakness is in line with the rest of the region currencies, but the baht is down 7% in the last 3 months. It is among the worst currencies in Asia behind only the Philippine peso and the yen. At what level and how much more weakness before you decide that it is important to intervene?
Actually, in the big scheme of things, if you look year to date from the beginning of the year, the baht is actually in the middle of the pack in terms of our regional currencies. You know, we are down by around 6% relative to the US dollar since the beginning of the year. Taiwan, Philippines, and Korea are weaker, and you know, Japan is like minus 15%. So from a longer perspective, it's actually, you know, we are in keeping with the peer. If you look at our trade-weighted basket, the nominal effective exchange rate, it's down 1% since the beginning of the year. So there's short-term fluctuations, but in the more you know, longer time horizon, I think we are still pretty much in line with most other countries. So at this stage, we are just monitoring the developments, and you know, we also should recognize that we've been hit by a pretty big negative terms of trade shock, around in the order of 10%, which is the biggest in the last couple of decades. By the nature, you know, that the price of imports has increased relative to the price of exports, you do expect some weakening of the currency, and that's part of the adjustment mechanism. But in terms of the magnitude since the beginning of the year, I think we are still in line with most of the region.
Disyatat, what about the government itself? In what way are you coordinating monetary policy with fiscal policy, and what more can be done in regard to that?
There's a clear division of labor going on. I mean, we definitely consult on economic developments in general, but in terms of the policy measures, there's a clear division. The government and Ministry of Finance is looking in terms of measures to ease the burden from higher prices. This is either through, you know, measures that directly alleviate the price pressure, including the energy subsidies and electricity subsidies. There's also targeted income support, you know, to the more vulnerable groups of people who face higher living expenses. So that's what the Ministry of Finance is focusing on. For the Bank of Thailand, we are focusing on the big macro picture in terms of guaranteeing a smooth recovery that does not add to inflation pressure in the medium term.
Let's talk about the macro picture. We have growing calls for a recession in the US, in Europe, even in Japan. How might that play out? How concerned are you? What are your own expectations?
I mean, for an open economy, we're definitely dependent on exports and also the state of the global economy. That's something we watch out for. In our baseline forecast, we do not forecast a recession for the global economy nor the US. It's a risk factor at this stage. For this year, most of the pickup in activity is going to come from the return of tourism plus domestic demand. So I think that's pretty much resilient. I think next year is where the risk in terms of the global slowdown becomes more pronounced. And partly for that reason, we want to move policy in, you know, normalize in a gradual manner, just to be open to developments.